All right. Good morning, everybody. I'm Aaron Hoy with Capstone Home Loans. Is everyone able to hear me okay? Let's see here. I'm going to ask everybody to unmute just real quick so you can make sure you can hear me.
I can hear you, Aaron.
Oh, okay.
I
Hi,
can hear
Kennedy.
you.
Thank you for joining me there. It looks like I have Elise and Johnny. Johnny, are you able to hear me too? Okay. All right. Well, I'm just going to go ahead and get started here with webinar. Again, my name is Aaron Hoy with Capstone Home Loans. I have been with Capstone Home Loans now for about 7.5 years, and I've been in the loan business here since 2001. And so my expertise is with veterans, and being a vet myself from the U.S. Navy. That's what got me up here to Everett, Washington, and also work a lot with first-time home buyers and credit repair and that sort of thing. So, but yeah, today I wanted to go over just kind of the basic steps of the mortgage process. I know in general, people really don't know what goes on behind the scenes. And my job here today is to kind of go over that a little bit more in detail for you. And I'm just going to take about 20 minutes or so, and then I'll open up to any questions you have about the process, and happy to go over that here a little bit more. Okay, so I'm just going to go ahead and get this started. So give me a moment here while I get that going here. Let's see. Okay, and I'm going to share my screen here. Of course, remembering how to do that is the important part. Let's see here, share. Okay, screen 2. All right. Can everyone see the screen here? All right, good. So we'll go ahead and get started here. So pre-approval versus a pre-qualification. As you guys probably already know, with pre-qualification, that's just when someone calls me and says, hey, do I qualify for a mortgage? And to do that, basically, I'm just going to go over the mortgage payment with them. We're going to calculate what their debt to income ratio is based on what the consumer tells me what their debt is, and what their income. And from that, I calculate what they can be qualified for. Now, with today's market, obviously a pre-qualification is nothing. So pre-approval is the standard. And so the difference between a pre-approval and pre-qualification is I'm actually going to pull credit for the client and run them through an automated system called Desktop Underwriter or through Freddie Mac. And with Fannie and Freddie, they're under the government conservatorship of FHFA, and they have these systems that we can run things through. All mortgage loan officers use it, either in the banking or the mortgage brokering world. Once we get a desktop approval, we're able to send out a pre-approval letter. Now, usually what we're going to do too is we're going to verify assets, verify income. We're going to ask a lot of questions. We're going to get a full loan application. So when a client comes to us for a pre-approval, we're going to make sure that they are really solid before we send out that pre-approval letter. Okay, the next part, the mortgage process, we're just talking about the pre-approval. Once we get the client pre-approved, then at that point, they can go out shopping for a home. And as you can see here, when they find a home, the next step is getting a home inspection. Obviously, with this current market right now, not all clients are getting home inspections. They're foregoing that because they want to get their offer accepted. But in the typical regular market, that's pretty common. And then the initial loan disclosures will go out to the clients. So when the initial loan disclosures go out to the clients, that's going to be their loan estimate and all the other documents that are going to go with it to start the process. So once the clients actually get going, within 3 business days, we are going to send out all the documents that they need to get that process going. One of them is intent to proceed. So again, this is after an offer has been accepted. And then we send it up to our processing team. My processor is Nicole Norton. She's been doing it for about 5 years now and does a fantastic job. And so she's going to process the files. She's going to verify the tax returns if we need those, which is typically, by the way, only needed for self-employed borrowers or for borrowers that are doing or have investment properties. And then we're going to verify W-2s for the last 2 years in most cases and 30 days of pay stubs. We're also going to verify 2 months of assets. So when we're referring to assets, we're looking at liquidable assets. So you're looking at bank statements. We're looking at 401k, retirement accounts, stocks, bonds, annuities, IRAs, anything that's something that is of value. And then once we get all those conditions that we need, and we try to do everything, we try to think like an underwriter so that when the file is submitted to an underwriter, there isn't going to be a whole lot of conditions left over. So now there's always conditions, but almost always, very rarely do we send a file up to an underwriter and they not have any other items that they're going to need. So that's very typical. And then from there, we send it to underwriting. That typically takes about 3 days, business days in the current market. And then when the underwriter gives us the approval, from there, we'll go back to the client, let them know what conditions that they're going to need for final approval, and then we resubmit for the final approval. And that's when we resubmit for final approval, we order something called the closing disclosure, also known as a CD. It's the final loan estimate that the clients are going to receive from us. It's a good opportunity for me to call them, go over the numbers and verify and make sure that that's still on track with what they have in mind. With that mortgage reform that happened a few years ago, that was one of the changes that happened. I actually really like that change because it allows for us to know going into closing a pretty good idea of what the numbers are going to be. So it's not going to be the final numbers. That's going to come from the settlement statement that escrow is going to provide once we get the docs over to them. But it gives us an opportunity just to verify. And if there's any mistakes, now is a great time to catch them. Now, once they sign the CD, 3 days later, we can then have the client sign final loan documents. And at that time, that's when escrow will provide the settlement statement with those final numbers on there. And then once the client signs or clients, from there, the funding usually occurs the next following day. So if we have loan documents signed by all parties by 1 p.m., say on a Monday, we will typically fund on Tuesday. Now, there are cases where we'll do same day funding. Those aren't a guarantee, but that is something that can happen, especially if we need it to happen. Okay, so we talked about the final documents, signing, closing, and funding. With funding, closing, that's the same verbiage. I always explain that to the client so they understand that that's the day they're going to get their keys. And the day of funding, we'll talk about that. I will give a call to all parties to let them know that that we have funded, and letting the client know that once the recording numbers are issued by the county, from there they can usually get their keys and to reach out to you. And so that's kind of the process in a nutshell for the whole process. So again, the pre-approval, we'll submit a loan application in person, online, or by phone. Nowadays, a lot of my clients are doing applications through the website. And then we'll send the requested docs as soon as possible so that we can get that pre-approval going. Then also with the credit report, I always go over that with my clients in detail so that we can make sure that nothing on there is something that they're surprised about. You would be surprised how many people who come to me and they find out that there's a debt that they co-signed for and they didn't realize that that was impacting their buying power. Because if, for example, I see a lot of parents who co-sign for their kids on a credit card or a car loan, especially car loans, and that child maybe missed a payment and that is now affecting their credit. Or if they have a debt that they're co-signing for and that's now impacting their debt to income ratio because they co-signed. So these are things that I always want to get that out up front and clear the air and make sure that they know moving into this that that debt can impact them. In most cases, if we can show proof that the whoever they co-signed for is making their payments on time, we can not utilize that debt against them if we can show a 12-month payment history by that person who bought that car or got that credit card. Okay, and then the next part here with the pre-approval letter, when we send out the pre-approval letter, we typically send it out to you, the agent, and then also the client. And then also we have a communication guarantee that we attach to that, just allowing everybody to know that moving forward, when they get into contract, that we will communicate every Friday with an update, and then also during the milestones. So again, everyone is in communication and everyone knows what's going on. The other part on that too, with the communication, I typically will call the listing agent when we get into contract. And even I can actually call the listing agent before if that would be helpful on a transaction. I know nowadays with the competition that's out there, it's good to have that done as soon as possible. Again, talking about the fine home inspection, we already kind of went over that. You know, obviously with the inspection that is optional. Let's see here. Talk about initial loan disclosures, processing. We went over that. Oh, one thing with the with clients, they can pick their own insurance company for homeowners insurance. And we have a list of people that we recommend, but they can pick whoever they want. Now with private mortgage insurance, which is a little different, and I'll probably do that with another webinar, but for private mortgage insurance, that's typically something we shop for. There's about 6 different MI companies that we use on a conventional front. With FHA, it's kind of its own insurance, so you just get what they have for you. But with conventional, we can actually shop at. Okay, and let's see here on underwriting. Again, with underwriting, the key thing is we really want to get as much documents up front as possible. And then over here on, we talked about the CD, the 3-day waiting period. Final loan documents are sent to escrow. Escrow will send final numbers via settlement statement to borrower for review before they sign the paper. Again, typically the numbers aren't going to be that much different from when the CD goes out and when the settlement statement goes out. All right, and escrow will set appointment with borrower to sign their final documents either remotely or in office. Of course, nowadays, especially with COVID, a lot of people are meeting either at their homes or somewhere else, a public place. I don't see as many of my clients going into the office as much with the escrow, but that is still an option there. Wiring funds or cashier's check are sent to the escrow company on the usually the day before or the day that they sign documents. And of course, we talked about once recorded, the keys are given. The one other thing too I want to talk about that isn't on this webinar is the credit approval. So credit approval is one step more than a pre-approval. So with a credit approval, we're going to go through the same steps that we did with the pre-approval, with the exception of we're going to actually send the file up to an underwriter for them to review. Now with the underwriters, they're going to just look at everything as though the client had already accepted the offer and that the seller has accepted the offer. So basically the file is underwritten minus the appraisal and any other things that are related to the actual property. So what does that mean to you and your clients? So a credit approval is not a guarantee, but it's the closest thing to it. And there can be things that can pop up later on in a transaction once they get into a contract. And I have had that happen 1 or 2 times here over the last few years where something came up that we weren't aware of until they actually got into contract. So there is still the possibility that you get into contract with a credit approval and you will find that there can be some things that pop up. It's usually property related, not necessarily related to the credit, because that we're going to go and verify with the verification of employment. We're going to get transcripts from the IRS. We're going to get all the bank statements that we need. And actually, we have a really cool system called Account Check. It's a optional service for our clients, but it allows us for us to check their assets remotely, so they don't have to upload their bank statements. Now, some folks really want that. They want to have that control, or they feel more secure knowing they're just sending us or uploading the documents that we need. But for those folks that are kind of more savvy with tech, they log into, like, for example, we'll use Boeing Credit Union. They'll log into their account with Account Check, and then Boeing Credit Union pushes those statements to us so that we have those for review, and it updates it every 60 days. And we also can do some of that with the employment stuff too, which is really cool. So with a credit approval, it's something that I recommend all clients do if all possible in this current market. It's going to be the strongest offer that they can make, and it's just going to put you and your offer up above everyone else's, except for probably the cash offers. Okay, so I've talked a lot here about the whole mortgage process. Looks like we're about 11:17. What kind of questions do you folks have for me here? Now, I'll allow you guys to be unmuted if you have any questions. Okay. Well, if you guys don't have any questions here, again, Aaron Hoy with Capstone Home Loans. Hopefully you found this really helpful and useful. You can reach out to me. I have a great little QR code here for you to take a look at. It's a mobile app that real estate agents can use and we can partner up on. It has a great mortgage calculator on there. It allows for you to share the mobile app with your potential clients. And they can also upload documents directly through the mobile phone. So it's a really great app, and I think you'll really enjoy it. Okay, well, unless you guys have any other questions, I think I've covered everything. And I appreciate everyone here, and look forward and talking with you soon. Feel free to give me a call or shoot me an email or text me if I can be of any help here moving forward. All right, have a wonderful day.